Thanks for joining me today for this video related to the CARES Act and the announcement related to the extension of the suspension on federal student loan payment and interest. And really today what we're going to talk through is the announcement that was made on August 6th. And since then we've been getting a bunch of different questions about it. So we just thought it would be helpful to talk through what the news was, what the announcement actually said, and then some potential considerations related to student loan planning. For a little bit of background before I dive into the content and then kind of go through the details. My name is Brian Walsh, and I lead the financial planning team here at SoFi. So really, I just get the unique experience to see what our members are asking our planners about on a day in and day out basis. Even though I am a certified financial planner, nothing I talk about today should be looked at as financial advice. Think about it as high level education, guidance, things like that. Okay, so let's get into the meat of this. So for a little bit of background here, the suspension of interest and payments was first announced back in March of 2020. So since then, it got extended and it was set to expire on September 30th of 2021. The announcement that took place on Friday, August 6th, extended that suspension all the way through January 31st of 2022. So why don't we break this down a little bit, and then we'll get into some key takeaways or key insights that you may want to consider. So I guess, when you think about it, you're looking at the announcement. It was called out as the final extension. And really the administration expressed the goal of this extension to allow borrowers to plan ahead for their payments to resume, which would ideally, in their mind, reduce delinquency and potential reduce defaults. Crazy things can happen, but the administration seems to be making it pretty clear that this is the final extension. So if you do have federal student loans, please make sure that you plan accordingly for this ending on January 31st of 2022. It's also worth noting some other key aspects of this extension that are similar to what we've been experiencing for the last year and a half since it started. This extension and the suspension of payments and interest is related to federal student loans, not private student loans. During this pause, the interest rate on these impacted loans is set to 0%. You also don't need to make payments, but you can if you wanted to, and those payments would go towards reducing the principal balance. It's also really important to keep in mind that these suspended payments, they count towards loan forgiveness programs, including income-driven repayment and public service loan forgiveness. And then keep in mind that the extension of this pause is not the same thing as forgiveness. So once the suspension ends, payments are going to resume and kick back in with interest. So as I think about this kind of from a member student loan planning perspective, here are some things that I think may be worth considering. I think, we'll break this down into three things worth considering. Number one, plan and prepare for this being the final extension. Like, if you think about it, payments have been suspended for a pretty long time. So it's natural that a lot of the members that we interact with, they kind of got left out of their budget when they were thinking about their expenses because they haven't paid in so long. So if you think about from a timing perspective, when you start planning ahead for your 2022 expenses and your overall goals and your finances, please make sure that you leave room in your budget for these payments resuming. Number two, if you're in some sort of financial stress or experiencing financial hardship, this gives you a few extra months to really start planning ahead. It might be worth reaching out to your loan servicer and explore maybe different income-driven repayment plans. And then number three, final takeaway, I think interest rates are still, near historic lows, which might present a unique opportunity for borrowers because, you could essentially check your rates online, go through a soft credit check without impacting your credit score, and you can understand what potential rates would be for student loan refinancing. Interestingly enough, SoFi is also offering a very unique program in which you can lock in your rates now, but still not make any payments until February of 2022. So this program could be really helpful if you're really weighing the potential long-term benefits of refinancing to a lower interest rate and what that would save over the long term with the short-term benefits of the payments being suspended and not having to make those payments out of your monthly cash flow for the next few months. So sum it all up, just like with everything else in personal finances, your approach to student loans and responding to this is going to be unique to you. Hopefully, the main goals of today were just make sure everyone understood what the extension meant, some key things to consider, and then some potential takeaways depending on your circumstances. So that way, between now and when payments kick back in, you can have a little bit more certainty and make a plan for your student loans that's right for you and your family. Thank you so much for joining me today, and have a great rest of the day.